Hello everyone and welcome back to the channel. If you're finding trading difficult and confusing and it's blowing your mind a little bit, then stick around for today's video because we're talking about simplifying the process. Before we get into today's video, I just wanted to let you know I have a free 13-part video course on why you're not winning at trading and how you can turn your results around. We cover 10 different topics in this course, running through risk management, technical analysis, and trading psychology. It's completely free to join, and you can do so by going to that link in the description and signing up today. So today we are on the topic of keeping your trading simple. Traders overcomplicate the process of trading and make it way more difficult than it needs to be. Traders bring in too many confluences, too many ideas, and one of the worst parts is too much discretion into their trading. There is no need to do this. You can keep things simple and get better results because you're going to run into less losses and your mind is going to be a lot clearer when you're trading. We know this is a mental game, so staying on top of that and keeping things as simple and streamlined as they can be and only need to be is going to bring you better results in the long term. Now, almost everyone is guilty of this. Retail traders, smart money traders, everyone actually runs into this overcomplication of trading. When it comes to the retail concepts, if we look at retail traders, they're normally using 5 or more different chart patterns, ascending and descending trend lines, support and resistance levels, and indicators. All of these things together allow for a lot of discretion in trading and so many things you can look out for and base your trades on. There's just too much going on. Too many different setups are going to be taken. It can really make things difficult by clouding your mind and giving you too much to work with. Now, on the flip side, smart money traders also are guilty of this, and their problems come in through too much discretion. I see a lot of other smart money concept traders trading with too much discretion. So they have a few different things, entry types, rules for entries, and so on. But then they actually just fish around in the markets and take, setups that look different, 10 different setups in a day or a week that look completely different to one another because they're just using the concepts, not in a systematic approach. This massive amount of discretion can make it hard to learn, and it can make it hard to actually succeed long term, even if you are just about pushing through. There's so much going on, and every setup looks different. It's actually hard to learn from your backtesting and from your previous trades. So what do I actually mean by too much discretion, and what do I mean about the retail traders having too much to work with? Well, let's jump over to the chart, and I'll give you an example of each. First of all, looking through the eyes of a retail trader here, we can see we have a lot of things commonly used by retail traders on the chart. We've got support and resistance level, trend lines, moving averages, and overbought, oversold indicator like the stochastic. Some traders use the RSI and so on. I don't really know what they do. But anyway, what I want to show you here is the fact that by using so many things and so many contradicting indicators and things like this, we can actually get stuck and actually run into quite a lot of problems, right? So starting back here, we can see we have a downtrend forming. Now, throughout this, obviously, we've had some nice downtrend retests, and obviously, you may have been able to get some trendline trades from that if you were a retail trader, but it's all of the other contradicting things that are going to catch you out, all right? So this is quite a neat trendline, so that's good. Normally, they're not that neat, but what we can actually see is if we look at this area, right, we had a support retest, the market has then came down, retested it as a resistance, and then came in and retested it at resistance here. So we could think at this point, right, a lot of retail traders are actually going to sell the market at this level because they've seen, all right, support has now turned into resistance, and we are in a second resistance retest. And if we look also, we have additional confluences like this, right? At this area, we have oversold conditions on the stochastic indicator. So many traders are actually going to sell this level with stop losses over the resistance. And at this point, they're actually going to be taken out by the trend line. Okay, so you would have taken a loss here. Now, another idea of this is, for the most part, retail traders are actually not understanding that we can get these fake outs, these false breakouts. So what a retail trader may now see is, now that we've broken this resistance, okay, we have a break, we've had this kind of retest, we've had a break above the trend line, and we have a moving average here as well, just underneath. We may think, right, well, because this oversold didn't matter here, the oversold here might not matter. And we do have a trend line break, resistance break, moving average retest. We may look for a buy from that level to take it higher, in which case we would have lost again, okay? So as you can see, it's pretty difficult to actually win when there's so much going on, right? You've got so many different things to focus on, too many ideas, too many confluences that all kind of combat each other. If you are, just trading as many retail traders do, as most retail concept traders do, which is, okay, I've got a bunch of confluences, I'll wait for some to align and then take a trade. In instances like this, yeah, you're going to run into quite a lot of trouble. So that is a retail outlook on the market and why it doesn't work so well when you actually come to bring it live. Seeing the market through a smart money lens may initially seem a lot neater, but the problem with this is we can actually, be too discretionary with the trades, okay? So let's say, for example, right, we're in a downtrend overall. We know we want to sell and we have an initial idea to sell from this area. That's all good. And if we go for that, we're going to get a nice trade and we can continue it down. But the problem is discretion creeps in and we start taking, smaller trades and we start thinking, right, is this the right zone? Is this the right zone? And so on. So at this point, we see a sell-off. Let's say, for example, then when we pull back to this area, we may be looking at all of these zones on the way up to this, right? We may see, right, we're in a downtrend. We've came in, we've traded into this point. We may actually execute a short in this area to take lower. Now, at this point, we would have lost that trade. When the market moves up and reacts to this area, we may think, okay, maybe the market's going to make a reaction from here. We may either execute a trade there or wait for some breaks of structure, in which case, potentially what zones are we looking at? Are we looking at this one? Are we looking at, this one here? And so on. It becomes very, very difficult. And then when we see at this point, we had a break of structure, okay, we may be then looking towards these areas to bring it down. So we may look at that zone or we may look at this zone. And obviously, if we're selling into this zone, we're selling into this zone and so on, we're going to run into a lot of losses. Things can get hectic. And this is one of the biggest problems people have with smart money is actually what zone do I sell from? How do I know to actually just wait and be patient, right? Now, if you systemize your trading, like I said, even with the retail concepts, which are not a favorable way to trade, but if you systemize that to simply trading one method, like trendline retests, it cuts out a lot of the confusion, cuts out a lot of unnecessary losses. On the smart money side of things, if you systemize the process, systemize the zones, what zones you're going to sell from, what zones you're going to buy from, and so on, it's going to make things a lot easier. And you're not going to run into this hectic mess that a lot of smart money traders get into. And more unfortunately, a lot of smart money traders teach, right? What I like to do and what I like to teach is a simplified process and an actual system, a repeatable system, okay? So you can see discretion is the problem with smart money. It's not so much the methods, but it's putting them into action. So now that I've showed you the problem with retail concepts and smart money concepts, what is actually the best thing to do? I can't just tell you it's wrong and then leave you with that. So what actually works better and what is it that you should be doing? Well, first of all, I think you should be creating a system. This is how I trade. I keep it simple. A lot of my members have come from other groups, have come from other education areas, and they love the way that everything is systemized and super simple to actually follow. I think you should be creating a system as your number one priority. If you are trading retail concepts, in my opinion, you should move over to the smart money style of seeing things. I think you're going to have much better results if you do. And then when you've done this and you're trading on a smart money basis, you should begin thinking about your confluences, right? What are the confluences you use to find trades, to enter trades, to exit trades, to manage trades, and so on? When you've thought about these confluences, you then need to put it into a repeatable system. Repeatable is the key word there. My system can be repeated time and time again. I can actually use it on multiple time frames, but the idea is the concepts behind every single trade I take. And if you were in my group and you saw the case studies I put out every single week when we take trades, they're all so similar, right? They all follow pretty much the same process for every single trade, regardless of the time frame. So you need to build a repeatable system that you can take trades on time and time again, week after week, day after day. Your system needs to include things like this: a step-by-step confluence process, not a scrambled list of different confluences that you can try and align. You need a step-by-step. So for example, first of all, I'm going to wait for a break of structure. Then I'm going to find inefficiencies. I'm going to find supply and demand zones. At those inefficiencies, I'm going to place orders or wait for the market to come into these supply and demand zones. I'm then going to execute my trade, and then I'm going to manage my stop loss, my rules, etc., like so. So as you can see, that all goes into a list, right? That goes into a simple, repeatable process, an actual system, not just here's a loads of things, I'm going to work with them. It's actually step by step. Here's what I do to enter. Here's what I do to manage. Here's what I do to exit. Okay. So you need the step-by-step confluence process, entry, target, and stop loss rules, trade management rules, and exit rules as well, for obviously when you are early exiting a trade, or ways to actually exit when the trade doesn't go your way. When you have that system, you need to backtest the system. I have videos on this, and I have an extremely in-depth chapter on backtesting coming out for my Academy students tomorrow. When you've backtested, you want to track the results, and from the tracking and from the reviewing of the backtesting, you need to make improvements. And you can do this by actually seeing patterns in your backtesting. What's good, what's bad, what can you move out, what can you build upon, make those improvements, and then when you've done that, it'll be time to go live. So remember, trading doesn't have to be complicated. whether you are trading retail concepts or smart money concepts, you really do not need to be overcomplicating things, and you need to put everything into a system. The best thing you can do to succeed long term is keep it simple. So I hope this video has been as beneficial as I believe it will be. If it has, please drop a like on the video to show your support, and subscribe if you don't want to miss any of my future educational videos. As I mentioned at the start of the video, I have a free trading course that you can join right now by going to the link in the description. Over 500 people have benefited from this free course in the last month. So if you want to be the next, make sure you don't miss out on that.